Welcome to Keeping Up with Trends. This is Fred Razak, Senior Trading Strategist here at CMTrading, and we're joined with your host, Sergio Davids. Good
Hey Fred,
evening, good morning, and good afternoon.
awesome. It's sunny, well, mid-afternoon for me, but I guess I should be saying happy birthday, Fred.
Oh, haha, thank you.
You're welcome, man, and I hope you have many, many more and have an awesome time planned with your family.
Oh, thank you. Thank you. I appreciate that.
Awesome. So, on today's agenda, I thought we'd talk about what's been happening in the world of commodities. We've seen both gold and oil, take a huge drop. And then conversely, Bitcoin is on the rise, hitting about 36,000. So let's begin with gold. So a few weeks ago, gold was pushing above $2,000. It, and subsequently, the Fed had its meeting, and we've seen it tank. Is there any correlation between that, or is there something else going on that we don't know about?
So this is the thing with gold. Okay, both of them are going down. Gold and oil. They're
Yeah,
both. I wouldn't say tanking, but they're selling off. Okay, that's
yeah,
more likely. Tanking would be somewhere, way south of this.
okay,
Um, but they're both going down for different reasons. Okay, so gold is more related to inflationary uh, fears. Okay, mostly because we're not sure how long the Fed is going to keep these interest rates at these levels and how they're going to react moving forward. Now, over the past 6 months, the Fed has signaled that inflation was tapering off. And we found ourselves back almost 20 years ago. No, actually 40 years ago. What am I saying? 35 to 40 years ago. I was still around back then. And so we've sold off significantly in gold from 2000 down to 1948. Now, we did hit a low of 1821 right before this happened. We challenged our 200-day moving average and we went north from that. Now, we've been trading in a range for over the past 3 years. Ever since we got out of Corona, we've been trading between 2000 and a south of 1650. Now, that's a wide range, okay? But
yeah.
most of the activity has really been between 1850 and 2000. Um, and so right now, it didn't justify us pushing higher than 2000. However, is there enough clarity moving forward in terms of how the Fed is going to respond and in terms of are we really coming out of this inflationary environment that we've been in order that the Fed doesn't have to do as many things as they've done until now and then can start pulling back? I mean, we're kind of like, go ahead. You were going to say something.
No, I was just gonna try and add on to what we spoke about last week with regards to the November Fed announcement. Is this not a sign that, we're kind of out of the woods? Reason being is gold is, a safe haven, right? So the fact that gold was going up and up and up beyond $2,000, in a certain respect was, bad news, for the economy. But the fact that it's dropping, is that not a sign that things are sort of reversing? As in,
Okay,
we're going to
so
see lower
this is
inflation, lower interest rates?
so this is the thing about these two aspects. Okay, number one, um, I don't think that we're so clear that we're out of the woods so far. And number
Right.
two, we've kind of gotten used to the fact that the Fed has kept interest rates at a very low rate for over 30 years now. And it's really, they've played this, I almost want to call it a game
Right.
because the markets go to astronomical levels. The Fed then increases interest rates. The markets then tank. And I'm talking about correction of 2008. I'm talking about the correction of 2013.
Yeah.
Also the correction of 2020. all these corrections happen, and then the Fed eases interest rates for a longer period of time, and it keeps it close to 1.25 or something around that. And then, the markets just spur and we get this constant expansion in the market. Now, South Africans I know are not privy to this, but in the US, the real estate market is a very big chunk of the GDP. And the interest rates really affect people's ability to borrow money in order to purchase new, either commercial or residential properties.
Yeah.
And what's been shifting in that is really many things, because there's much migration in the United States today, and that really affects the whole world almost. Because if
Hmm.
one area is affected, all the areas are affected.
So let me ask you this: is this will the trend, the selling off of gold continue? Will it
Well,
stabilize?
I think that everybody's ears are perked up to the Fed Chairman Powell's speech tonight, which is at 9 p.m. South African time,
Yep.
and his comments and which way he's going to direct the conversation in terms of which way he's going to go. In terms of, is he standing by higher longer, which means that interest rates are going to be higher for a longer period of time, or is he going to change that at a certain point?
I see. And moving on to another commodity that's also seen a bit of a sell-off, oil. I read online
So
that um, you know, oil's dropped quite significantly. I mean, well, WTI anyway is trading around $75. Crude is still hanging around 80. And I was reading this story. I think it was out of Bloomberg that was saying that um, U.S. crude inventories, right, increased by 11 million barrels in the first week of November. So that would make the biggest weekly build since February. So what's happening? Are we seeing quite a low demand for oil? Um,
So
you know,
this is when it comes a tricky time of the year for the northern hemisphere. The uses for oil are
right?
not only for automobiles and automotion and for planes. It's also used for heating.
Yeah,
And if
but then
the
I was
north,
about to say
yeah,
that, but wouldn't the prices then go up? There'd be more demand, especially for heating one's home.
but if the northern hemisphere is all of a sudden getting a warm front, where they expect
I
it to get
see.
something
Yeah.
colder for this time of the year, then then people are not going to be heating their homes as much, and then there's going to be a backlog, and there's going to be surplus, and that will decrease the price of oil. Now, that doesn't mean that the decrease of the price of oil on the financial markets will mean any different on how much you'll pay for gas at the pump, because that price is really factored into a lot of other reasons besides the price of what's in the markets. Because you have to take into consideration that most countries issue a very heavy tax on oil at the pump. So that is really where most of the money is going to.
That's interesting. I mean, not too long ago we saw oil pushing upwards of $90, and now it's dropped again. The Russian-Ukraine conflict is still going on, so that's doing detrimental effect on oil and oil supplies. But yeah, it's fallen back to that sort of 2022, late 2022 range.
Yeah,
And what do
$75
you?
a
Yep.
range.
Yeah.
Yeah, and
So what do you think is going to happen with oil going forward, though? Do you think it's going to stay
so
this way? You think there might be a breakout again as winter, proper sets in?
I don't, what factors are, I'm not really sure that's going to affect the oil market. But what's for sure is, on a technical level, it does have, support around $68, $67. So, and it also has been trading in a very specific range over the past year. Okay, now it did, well, mostly because of what happened with Ukraine and Russia in 2022 in February, hit a high of
Yeah.
close to 100, 130,
110, I
100,
think. Yeah.
$130, $135, somewhere around that range. But we've been in a very conservative range. I mean, 90 to 65-ish dollars. So that's relatively, I wouldn't say a tight range, but that's a range. Um, Definitely acceptable. Now, where does this pinch you? This pinches you in more, airline fares and, that type of stuff. But ostensibly at the pump, we're going to be spending the same amount of money. I mean, a variation of maybe 5% or 2%, but not more than that. So I do see it continuing to trade in a range. It should be kind of interesting what's going to happen with all these EV vehicles being produced in Saudi Arabia now.
Oh yeah. It's quite a it's quite an interesting change of pace. I mean, basically, it's the land of supercars and sports cars, you know, and to go
Also, they're just
from yeah, I know that I understand that they're adapting to the times, but I mean, oil is still and will be their bread and butter for a long time to come.
yeah.
And but I mean, I think as of 2030, or actually even closer than as of 2025, Europe wants to ban diesel trucks within Europe, and by 2030, switch to have a major plans to switch to EVs. I mean, even India is banning fossil fueled vehicles. So yeah, it's not it's
It's
not
gonna be.
there
It's
yet, but
definitely.
it's coming.
Yeah, but it's also the consumption of it, the production of it. At a certain point, I don't think in the next 10 to 15 years it's going to make that much of a difference. But
Yeah.
shortly after that, it should make a difference. There are certain countries that have gone completely um, electric, but the electric car business is not the only business that oil supports. I mean,
No.
if you own a Tesla, you still need tires, and tires are made by
Yeah, there's lots
oil.
of ancillary businesses that need to support it. So, yeah, I don't think that's going to go away. It'll just change in terms of what they deliver. For example,
For
you might need a
sure.
battery swap rather than, for Grease Monkey to look under the hood, you know. There'll be new skills that need to be developed. So, yeah.
That's for sure.
Speaking of
That's for sure.